One of the main questions we get at Sequence is about the difference between an income source and using your existing checking account, whether that's a business checking account or your personal checking account. I'm going to walk you through the core differences between those two and the reasons that we suggest you use an income source when it comes to routing your money more effectively. Now, as you can see on my screen, I've got a basic setup right here. I have a business income source that I've created, which is the same as an individual income source, and I've got a business checking account. Now, this is the existing checking account that the business owner uses, and they're trying to decide, does it make sense to switch to an income source, which you can find at the bottom of the screen, for their incoming funds. And here's the main difference. It really comes down to reliability and speed. Because if we are to use your external checking account as the main source where all funds start and all rules are actioned from, what happens there is that we have to use the ACH pathways. And what that means, without getting into the technical side, is that we need to request that money, it needs to be sent over, and then we are going to start to distribute it out. That can take days, and sometimes that just doesn't work that well. And the reliability is not always there because banks are always changing their integrations, their pieces, and as a result, it's not something we can rely on 100% of the time. However, if we open up an income source and use that as our main destination point for all initial money and then create the rules from there, we're able to do not only based on date rules, but we're also able to execute the rules that you can action any single time that money comes in. So as you can see, when I draw a rule from my income source to one of my pods, I have the option to trigger by incoming funds. I can trigger by date. I can even do some more advanced options here. Primarily, people are either going to be using the incoming funds, so anytime money hits this account, the rule runs, or trigger by dates. The trigger by incoming funds is only available when using an income source, and that's because it's through our partner bank, Thread Bank, FDIC-insured, based out of Nashville. It allows us to instantly transfer that money so that there's no delay. If we want to use the business checking account, what I can do is I can drag that same type of rule. You'll see this option here, but the functionality is not there because it is not a partner bank. As a result, we need to request the money, it needs to be sent to us, and then we need to send it out. So it does add days. So for things like payroll or bill pay, some of those times it might not be an issue, but for other times you want that money to instantly transfer. So our recommendation is always using an income source. We realize that sometimes that's not necessarily the easiest piece to switch all of your accounts receivable to a new income source. So one other alternative option is, in case you do have many vendors paying you into your current business checking account, you can set up a rule where now we can trigger a date where every single time it's looking at our existing business checking account, in this case it's Capital One, we can start to create a monthly, weekly, bi-weekly, first and the 15th of the month rule where this money gets sent to the income source and then can start to utilize all of the different rules that we are trying to execute. So what we can do here is we can either transfer a fixed amount or we can transfer 100% of the balance every week on Friday to execute our rules. And that's one way that you can use not only your existing checking account, but also leverage the power of the income source to then instantly set up your rules to be going to all of the different accounts that you want to. Again, we prefer the income source because it allows us to instantly, with tremendous reliability, send the money exactly where it needs to go and not have to wait for the external banks to send the money in. But we realize that some people's situations are different, and as a result, you may need to use that workaround. Again, you can utilize the existing checking account or an external bank account to create the rules. You're just limited to a by date feature. So again, that is monthly, weekly, bi-weekly, the 1st and the 15th of the month. So if that works for you, you can use it as well. But again, from a reliability and speed perspective, the income source is going to be your best bet when you're starting with your money and wanting to flow out all of the rules that you're going to create.